All right. We got the euro dollar. This is the daily chart. Like I said in the beginning, almost exactly 2 months ago. I came up with the first bearish conviction on the euro dollar. Right. I published a video right here, which was titled Euro Dollar Bearish Outlook. Right. Now, it was at the 11th of December, so it was roughly around here. Take a look. Roughly around this spot, right? Where I started to explain and describe the potential of a serious downside move on the euro dollar. I was talking about, the medium to long term trend, right? I was not specific. I was not, I wasn't actually talking about the short-term perspective. I was referring to the long-term perspective, medium to long-term perspective. And little did I know at that point that price was going to continue trading sideways, right? I actually pulled the trigger not too long ago on a bearish position when I noticed that price was just continuing trading sideways in this trading range. So I immediately, pinpoint. I was able to pinpoint that trading range with my my setup here. And when I noticed that price was touching base on the top key level here, 115.46, and failing to break through, this is pretty much the moment I took action. So I established a bearish position, but it was a quick one. I thought that this may actually be the leg that will end the trading range, right? And I'm still waiting for that move to set the euro dollar free from that limiting system, right? So I'm referring to that blue system. Of course, we got the bottom key level 12.55, and we have the top key level 15.46. So when I thought that price was going to begin to run towards the downside 2 months ago, I was off. I was off with the timing. I don't think I was off with the general conviction, right? Bearish. I still think this is a strong bearish, situation here on the euro dollar. But I was off with the timing. Price just kept trading sideways. Now, this whole bearish conviction, if you remember, 2 months ago, I was actually talking about it. It all stemmed from a very significant reversal pattern that started to form on the weekly chart, on the weekly perspective. If you remember, we were talking about that head and shoulders pattern, right? Because we had a bullish trend that went from pretty much 2016, the end of 2016, and it went pretty nicely on the upside till we had the first left shoulder. Obviously, we did not know back then that it was going to be a left shoulder. You find that out just later. But take a look at that head. What a massive head, right? And this is exactly how we like it. For a head and shoulders pattern to be reliable, you want to have the head as far as possible from the shoulders, right? It is important that the shoulders will also be in equal length, right? Equal size. They don't have to be symmetrical. They don't have to be balanced. They just have to be roughly in the same size and obviously like virtually smaller than the head, right? So I think we had here, take a look at this. This is a really massive head and shoulders pattern because it appears on the weekly chart, right? So naturally, that's a big reversal pattern that actually suggests a massive downside reversal of the major trend, right? We're talking about the major trend. So price, as you can see, as it finished that right shoulder, it kind of began that very tight range, very tight sideways movement, right? Very tight. We're looking at that blue symmetric setup that is really nicely, engulfs the whole price action right from the get-go. But this is what is most important to me anyway at this point. This is what I would like to talk to you about. When I was analyzing that very local trading range, right? That trading range started around November 2018. So we're talking about 3 months of just, as you can see, very violent and hectic sideways movement, right? We can see prices, right, is all over the place. I mean, the second leg right here on the downside was actually violating the setup, right? Because it actually closed outside below that 1255. Later on, it came all the way back, really nicely touched base on that mid-high key level, 1453. And when I went to the weekly to see if I can filter out that violation, I saw that it actually was filtered out really nicely here with that spike. So I knew that the setup here is very much valid and intact, right? So I kept following up on that euro, and I just I couldn't help myself, waiting for price to reach one of the edges to strike. So that's pretty much what I did about, I think it was like 3 weeks ago. I noticed that price was going strongly to the upside and about to reach the top key level, 1546. As price failed to break through, take a look, these two spikes, I took action and established a bearish position. Now I actually thought this was going to be the last leg. I thought this was going to be the leg that's going to break out of that blue system and just resume the original downside trend, because the trend had started around September 2018, right, from that point. So we think that this was the first downside segment where this whole, these last 3 months, this really annoying sideways movement was actually just a technical correction, and we should be going right back into the same original downside trend. Now, when I was wrong, I was actually off with the timing here. The second time actually I was off with the timing, even though I made a nice profit. Even though I was wrong on the timing, I was able to make a really nice profit, because what happened was I got out of most of my position, my bearish position at 1348, which is according to the principles of the C matrix, right? You get to the other section, right? Basically we went from the very edge, the very top key level. Once we hit the mid-low key level, this is an important price target. So I got out, most of my position I got out. I left some small portion because I thought that was going to be the leg that's going to break down. But I was pretty surprised to see that swift upside reversal. I immediately, as I noticed that price came back to close above 1348, I knew that we're probably going to have another upside leg. So I quickly pulled out. And then I waited on the sideline. I wanted to see what's going to go here, how things were going to play out. And I noticed that price, it did climb a few days, right? And then made a very quick turnaround. And when it did that, and it broke below 1453, take a look right here. This is where I knew that we're probably gearing up to generate the last leg, right? So I thought at that point that I was probably prematurely thinking that this trading range is over, but we'll probably have another leg in the pipeline, right? So what I did was I decided to use that mid-low key level right here, 1348, as a trigger, as my official trigger to establish a second consecutive campaign on the euro-dollar bearish campaign, right? The first was successful, but the second, even though it was successful, it was not even close to what I expected to get out of the euro dollar had it was actually breaking, right? So maybe I'm gonna try again right now. I'm gonna try, because if I can nail this one, I think we have a very healthy right? Very healthy move. And I'm going to show you where I think it's going to go. So when it broke that 1348, that was just a couple of days ago, you can actually see I launched my second bearish campaign. The first portion was entered at 113.20, I believe is doing pretty well so far. Just a couple of hours ago, guys, I've entered the second portion right there. You can see it. But I have to say this, until we break below 1255 with a weekly confirmation, right, a weekly close, I'm not going to be, I'm not going to be too confident here, right? I'm going to be on the edge a little bit because we are still in a danger zone. As long as we're playing, as long as price travels here in that lower section, this is the danger zone. It could, I could be wrong about the count of the legs here. I could be wrong like I was last time, basically. And we might have another upside leg. Not too likely, less likely I have to say, but obviously it could happen, right? Theoretically speaking, it could happen. So I want to stay cautious with this one. So I'm not going to increase my position further until we break below 1255. Once we break below 1255, I think, party is on. Basically, I'm going to go as strong as I can, and I'm going to try to reinforce my position and increase my position as much as I can with the limits of my, risk management and money management. But I want to show you again the bigger picture. This is where it becomes fascinating, right? Let's assume that I'm right. And this is the last leg in this very tight range, right? So we're looking at the very beginning of the next downside move, right? The next downside trend, segment, if you will. And according to the big picture, don't forget, we had that massive head and shoulders pattern, right? So we have to use the head as a primary measurement for the potential downside move, right? We want to find reliable price targets. That's the bottom line. Now, I have two very important measurements that I'm going to use. I'm going to obviously use the head. I have to use the head, right? This is the primary measurement. But also, I would like to use the previous opposite move, the local previous opposite move. I know it sounds a little bit complicated, but what I mean is it's just that the last upside move here, the last upside leg. This one, from bottom to top. Simple as that. I want to use that leg as a measurement for gauging the potential, move, or should I say the projection of that move. Now, let's do that, right? Let's use these two measurements together. This is pretty much what I want to do. I want to see if I can find a powerful cluster, right? Projective cluster, where I get two different projective levels coming from two different measurements, but falling on the exact same spot. That's usually treasure, all right? Because we already have the conviction, right? We think we know, right? We think we think that price is going to continue moving south, right? That's the general conviction. Now we need to find a reliable price target. So take a look at what I'm going to do here. I'm going to pull out my Fibonacci tool, right? Which is just the projection analysis here. So what I have here is the 1.236, the 1.618, and the 2.618, which I consider the most important three projective key levels. And I'm going to apply the first in purple on the head, right? From the very bottom to the very top. And you can actually see, take a look. You see the 1.618 right here, right, which is already marked with a green dotted line, and also my take profit order. So that's going to be my final destination. All right. 109.40 roughly, 109.34, 35, 109.38, you know, roughly around these levels. Now let me take another measurement, like I said, and I'm going to just measure the last opposite move on the local, and I'm going to, we're going to give it a different color, right? Same levels, guys. 1.236, 1618, and 2.618. Let me just adjust this as, accurately as possible, right? So we got now a black measurement. Let's take a look at that. This is really nice. So you see, this is the 1.618, right? The most important projection level is the 1.618. We saw the 1.618 on the big one, on the head, is right here. Now, with regards to that last local opposite move, it's right here, 1.1150. 1.1150, 1.1147, right? Somewhere around this area. We're talking a few pip. So it's interesting to see that the 1.618 is right here, 111.50. That should be the very imminent next price target once we break, beyond that blue system. So that's going to be my secondary price target. My first price target for partial execution. Now take a look at what's going on right here. Right? So we have a really nice cluster. This is what I like. This is the best part. You see the 2.618 of the black measurement, right? The last opposite move, falls almost precisely on the 1.618 of the purple measurement, which is the head on that head and shoulders pattern, which makes this cluster a powerful and magnetic key level that should attract price to it, and then it could repel it completely at that point. But this is pretty much the situation. So I'm using a simple head and shoulders pattern coming from the big picture to get the conviction. Then I'm using a very local trading range to gauge the potential downside move with two different measurements to gauge, the projection of the potential on the downside here. So yeah, that's pretty much it. So like I said, I think I ran it from pretty much A to Z. Right? I gave you the conviction, general conviction. I also gave you, a safe trigger to, if you're risk averse, you might want to wait to make sure that price is indeed breaking out of that blue system, mostly breaking below 1255, right? For those of you who like to take calculated risks every now and then, like myself, then you can actually get on board even before we're going to have that break, because according to my analysis, I think we're looking at the last one here. So we got two important key levels along the way. We got the first one, 111.50, 111.47, and the second one, which is the final destination, at 109.35, and that's about that, guys. When it comes to my stop loss level right now, it's at 140.20, right? Well above 113.48, which is supposed to be our defense mechanism. This is supposed to be our defensive resistance, right? We're kind of hiding above that level. If there's going to be a quick move, a violent move, we don't want to be spiked out for no good reason. So this is why I'm placing that stop loss pretty far from price action, relatively speaking. Once we make it, once we cross that bottom key level here and main support 1255, I will begin to adjust the stop loss level accordingly, and that's natural. All right, guys, I think I'm done here on the euro dollar. Following up on a video session we had 2 months ago, I'm still holding my bearish conviction strong, holding it pretty strong, I would say, and I'm putting my money where my mouth is. The second time, this is my second consecutive bearish campaign on the euro dollar. I can only hope it's going to be even more successful, much more successful than the previous one. So we'll have to see, right? We'll have to follow up and come back, and I'll probably do that, and I'll keep you posted when it comes to the situation on the euro dollar. I hope you enjoyed this session, guys. Don't forget to follow up on with our program here, because we're doing very well, usually on average, and you should be part of it. So if you haven't subscribed already to the channel, make sure you do that. If you haven't opened an account, make sure you do that just as well. You can start with a demo account, just to feel the vibe, and later on get to the good stuff. Have a great trading day. Till next time, be well.